In today's video analysis, we're going to talk about Palantir Technologies, PLTR, a company that recently witnessed significant price movements and volatility. By looking at the key data points, the options, and the latest company updates, we're going to try to update an overall panoramic view on the potential outlook for Palantir stock. So without further ado, let's delve into the details to gain a better understanding of where the stock might be going on from here. So before we go on with today's topic, if you like my content and my videos, please consider to like and subscribe, and to take a look at the computer gear links that I have posted in the description. Basically, as long as you make a purchase using my link, regardless of where you are in the world, there is a chance that Amazon will pay me a commission based on the jurisdiction this platform is located in where you live. It doesn't have to be any product that my link introduces you to, but as long as you make a purchase during the session, meaning from the moment that you click the link to 24 hours later, or from when you clean your internet browser history, it would be good. So thank you very much for your continued support and interest, and let's begin with today's video. Palantir experienced a volatile trading day, with the stock fluctuating between $16 and almost $17, and closing usually at around like -1%. The trading volume has been low compared to the average, which indicates a slowdown in the big money and the retail activity. This trend suggests a possible loss of momentum. The options are showing that a total of $11 million in calls are being purchased, meaning investors, generally speaking, expect Palantir to keep going upward. The bullish sentiment has been accounted for about 74% of the 15.5 million premiums during put and calls. These options indicate a positive outlook for the investors. Palantir's Q2 earnings will be announced on August 7th after hours, and so far the consensus suggests that the revenue will be around $530 million, with earnings per shares projected at around 5 cents. The overall consensus remains positive, with no significant changes reported in recent analyst ratings. Palantir's short score is around 40%, with 7.8% of utilization and 6.61% of the free float being shorted. Shorts returned to around 672,000 shares on the latest trading day, which indicates a modest shift in the sentiment. While the short interest doesn't really point to a potential squeeze, it serves as a useful benchmark. The technical analysis reveals that Palantir stock is trading close to the 50-day moving average. Crossing this level may indicate a shift in the stock's trajectory. It currently trades between the support at $15.35 and a resistance at almost $17, which exhibits signs of potential volatility. Now, there's no significant news or SEC filings so far. Palantir's stock may be influenced by broader market movements leading up to the August 7th earnings announcement. Retail investors have been gradually reducing their positions since July the 17th, which possibly explains the decreased volume. So, Palantir's recent performance has been marked by price volatility, and its trading volume indicates a reduced investor interest. But the options activity suggests a positive sentiment amongst investors, which anticipates further growth in the future. The upcoming Q2 earnings announcement is a crucial event that could significantly impact the stock's direction. While technical analysis points to a potential volatility, Palantir remains a very disruptive company with a promising future. So with all that being said, let's take a look at the technicals of the stock. The trading volume of Palantir has recently been around 36 million shares versus an average volume of 56. Over the previous 52 weeks period, the price fluctuated between $5.84 and $19. The volume of shares traded tells us how many shares are being bought and sold at any given time in the market, and if there is enough liquidity to support a trading strategy. If the float is thin, it's going to be easy to push the price around, but the exit can be difficult. When we compare the current trend against the average volume, there might be a possibility for trend reversal. The market cap of Palantir is currently at around $35 billion versus the enterprise value of $15 billion. As we compare the price to the historical price fluctuations, the stock is at 18% higher than the 1-month low, 124% higher than the 3-month low, and 180% higher than the 52 weeks low. On the options market, which often gives us a hint on the market sentiment about where the stock price is going to head next, the implied volatility is at 82% versus a historical volatility of 52%. The put-call volume ratio is currently at 0.36. It is normal for most stocks to tend to have a higher put option volume than what they deserve because many institutional investors hedge their long positions by buying put options. The most recent volume options traded has been 186,000 contracts a day compared to the 30-day average volume of 303,000. In terms of the open interest, the most recent volume of open interest is 2.4 million contracts versus a 30-day average of 2.7 million contracts. In terms of the shareholder structure, institutional shareholders own about 33% of the current float. Usually, it's always great to see some institutional participation when holding a stock long-term. It's also the case here. I would say that Palantir is a relatively volatile stock for a title with such a degree of institutional participation. The current short interest is around 8%, so it's not very significant, and we don't really have to worry about this. If we look at the long-term price action of Palantir, we have to ask ourselves whether this company will have a place in the economy of tomorrow. Because we already know that Palantir will not be profitable for the next few years. This is already priced in. We know that Palantir is in a highly sophisticated area of the economy and that it aims to become an analytic board for the wealthiest entities on the planet. The true debate is whether Palantir itself can stand the test of time and to actually play this role, and if the market believes that it'll play this role. So Palantir fell by almost 80% from the peak of the share price, from around $35 down to $7.28. Much of it is due to the overall market trend, and the rest is caused by doubts on a company's growth potentials, as well as its business model to work with government agencies. I believe that Palantir has been testing its bottom for some time now, and that the downward slope finally stopped its progression over the past 6 months. Ever since, the price has been hovering between $7 and $8, but is definitely hesitant in going below $7. Does it mean that the stock will reach new highs very soon? That new recoveries will start immediately? I don't think so. On the other hand, I do believe that Palantir will have a place in the future and that significant changes will occur at some point. Given that it's been down by so much, the only logical scenario is a price recovery once the storm is behind us. This, however, hasn't happened just yet. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance, healthcare, and defense. The company's flagship product, Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is the ability to integrate data from a wide variety of sources. The platform may work with structured and unstructured data including text, images, and videos. It can handle data from multiple formats and languages. This makes Palantir the ideal solution for organizations with data spread across multiple systems, languages, departments, and formats. Palantir's solution is widely used by government and intelligence agencies as well as major financial institutions, consulting firms, and other organizations around the world. This is due to the platform's ability to help make sense of the data that they have and to identify patterns and trends or causalities that might otherwise be difficult to spot. As we look at the company's financials, something that is very noticeable for me is the positive gross margin. Above all else, this is a very good reminder to us that Palantir's core business model seems to work. It is true that the revenue has been growing slowly over the past few quarters, but the fact that the gross profit that is positive, suggests that the main issue now is the scalability and diversification of the operations. We have to remember that Palantir's revenue has been able to grow despite the fact that there is a de facto recession in many parts of the world, suggesting that its clients are relatively robust and resilient. The cash flow reports also suggest that despite having a net loss, Palantir can self-finance significant portions of its operations with positive free cash flow of its own at the end of each quarter since Q1 of 2021. This would mean that the pressure for Palantir to go through rounds of share dilutions can be relatively low, which is a very good thing for shareholders. Another significant aspect to consider would be the liabilities Palantir has on the books. They are very well controlled. So currently they are a little bit more than $900 million. This is normal considering the size of its businesses and the growth that it had over the past few years. I would say that Palantir has a decent chance to become something that we should invest in because there is around 34% of institutional ownership amongst the shareholders. This means that Palantir does have significant endorsement from money managers, but they're largely outnumbered by the retail shareholders, that there will be a significant chunk of people going in and out of the stock market based on market movements and short-term price actions. This also means that even though it might be good for investment, and I would highly recommend you to see it as an investment stock, beware of people who still hope to profit off the swings, and don't blink when small volatilities occur. One significant difference between the institutional and retails is their investment horizon. Institutional shareholders can afford to wait for sometimes decades before things blossom, whereas retail traders tend to go in and out. Another behavioral difference is how active they are in the governance. Institutional shareholders are more likely to vote on important matters and decisions, whereas the retail shareholders tend to not bother and to simply wait for things to happen in their favor before they cash out. Given the lower trading volume and the potential implications, investors should approach their decision to buy more Palantir shares with caution. It is more prudent to currently monitor the stock's movement and to evaluate the market trends before making any investment decisions. If you still have any allocation available and you believe in the long-term run of Palantir's potential, then I would say that it's worth to start buying now. It's essential, though, to keep in mind that the potential impact of lower trading volume on the company's price stability and its future performance. So I would recommend to commit between 3 to 5% of your portfolio when you're buying. It would also be recommended to split the allocation in batches of 20% at a time over 3 to 6 months, so that you may purchase more in further retracements.